In this video, we talk about the 4 types of audit opinions: the unmodified opinion, and then the 3 modified opinions, which include qualified, adverse, and a disclaimer. So let's take a look at each one of these so you'll know which one to use in the days ahead. We're also going to talk about SAS 134 and the new audit opinion. So here we are. We see the 4 different types of audit opinions: unmodified, qualified, disclaimer, and adverse. We start with unmodified because this is what you normally issue when there are no material misstatements. And when there's no material misstatements, then in the audit opinion, you're saying that the financial statements present fairly. So let's take a look at the new SAS 134 unmodified audit opinion so you can see what this looks like. There's some rearranging that the AICPA has done, and you'll need to use this new audit opinion for your December 31, 2021 ending periods. And the first thing we notice is the opinion section has been moved to the top. And I'm sure the AICPA has done this to give more prominence to the opinion itself. As we look at this section, the first sentence is not a significant change. It just says what the financial statements were that were audited, and we tell the reader what the period is. But the second section here, the second paragraph here, is the one that's really the most important in the whole opinion, because we say that the financial statements present fairly. So by saying that, we're really saying that there's no material misstatements in the financial statements. As we look on down in the audit opinion, we see the basis for the opinion, and this just says that we use audit standards in the U.S. to perform the audit, and that we have the evidential matter we need to issue the opinion, and that we believe the opinion is correct. Then we see the responsibilities of management. Nothing earth-shaking here. Now, there is a new section that talks about substantial doubt, so you'll need to make sure you're including the new 134 language in the opinion. Then we go to the auditor's responsibilities. There's some new language here also that you'll need to make sure that you include. And then notice they use the bullets here toward the end of the auditor's responsibilities to explain what we have done. You'll see this piece about risk material misstatement. You'll see a section that says we gained an understanding of internal controls, but we didn't issue an opinion. And then you'll see that we looked at the accounting policies. We also looked at the accounting estimates, and then the overall presentation. Nothing new there, it's just presented in a different way. And then this piece is new because we talk about going concern and substantial doubt. And we're saying in the unmodified opinion that everything's okay and there is no substantial doubt. Then this last paragraph is you would only use this if you have supplementary information, and nothing different here. We're still giving an in relation to opinion on the supplementary information, and then the firm signs the audit opinion. So this is your new SAS 134 audit opinion. You need to get real familiar with it because you'll see it for many years now, and that's what that looks like. So let's go back now and look at modified audit opinions, and we'll see when those should be used. Now let's talk about modified opinions, and we said those include qualified, disclaimer, and adverse. First up, let's talk about qualified opinions. Now I want you to think about a phrase and then another word as we look at qualified opinions, and the phrase is material misstatements, and the other word is pervasiveness. So if you have a material misstatement and it's not pervasive, then you're going to issue a qualified opinion. So let's expand this node and see what we have here. Notice that there's a situation where you obtain sufficient appropriate evidence, and then a situation where you are not able to obtain sufficient evidence. Either way, if there's a material misstatement or a possible material misstatement and it's not pervasive, then you're going to issue a qualified opinion. So remember these two key phrases, material misstatement and not pervasive. If you have both of those, then we're going to issue a qualified opinion. So let's bring this node in and now talk about a potential disclaimer. And as you already know, clients don't really want disclaimers, but this can happen if you're not able to obtain sufficient appropriate evidence. So for whatever reason, whether or not there's a client imposed scope limitation or there's some other limitation on your ability to obtain evidential manner, then you may end up with a disclaimer rather than an unmodified opinion. So as we look at the potential for a disclaimer, we ask ourselves, is there a material misstatement and is it pervasive? And we really don't know for sure when we can't get the evidence, but that's why we issue the disclaimer. If we're not able to wrap our arms around the key numbers, say in a balance sheet or an income statement, then we're not comfortable issuing an unmodified opinion, and that limitation is leading us to the disclaimer. Now, notice as we look at the word pervasive, it's defined in these three ways. One, the material misstatement is not confined, and that's what we often see when we can't get all the evidential matter. Maybe the limitation on our ability to audit affects, say, accounts payable and inventory and accounts receivable. Well, then it's not confined to one area and it's pervasive. When I think about pervasive, that's what I normally think about. But there's another way that a potential material misstatement can be defined as pervasive, and it's when it is confined, the potential misstatement is confined, and I think about, say, like inventory. So we're looking at one area, it's confined, but we think there could be a potential material misstatement. And let's say that inventory makes up 40% of the balance sheet. Well, that's a substantial proportion of the financial statements. If we can't audit inventory and it makes up 40% of the balance sheet, and we think there's a potential material misstatement, then we're going to have to issue a disclaimer. Now, there are some situations where you may want to consider withdrawing from the engagement. You need to talk to your attorney about that before you do so. Now, the third definition of pervasive has to do with disclosures. So let's say you can't get the information you need for a particular disclosure. So it's not included in the financial statements, and you think because that disclosure is not there that it leads to a material misstatement. And remember, material misstatement is not just the numbers in the balance sheet, income statement, cash flow statement, but it also involves disclosures. So if you're not able to obtain sufficient evidence in regard to, say, key disclosures, then you might end up issuing a disclaimer in that situation as well. Now, finally, let's talk about an adverse opinion. And I very seldom ever see an adverse opinion. I really don't see disclaimers very often. I do see qualified fairly often. But, if you are able to obtain sufficient evidence, then you might run into a situation where you've done the audit, but you know the numbers are materially misstated. And if it's pervasive, whether it's affecting many accounts or one account that is substantial, or there's a disclosure, a key disclosure that's missing, then you're going to issue an adverse opinion. Again, before you get to this point, you may want to consider withdrawing from the engagement, but that's a decision you'll have to make in consultation with your legal counsel. Now, as we close this presentation, I just summarized by saying there's 4 potential opinions in the United States if you're using U.S. audit standards, and those include, let me blow this up a little bit, those include unmodified, qualified, disclaimer, and adverse. Most of the time you're going here because there's no material misstatement, but you could go to a qualified opinion if there's a material misstatement that is not pervasive. For a disclaimer, this is normally used when you're not able to get sufficient evidence and you think there's a potential material misstatement and it's pervasive. But the key here is you've got some kind of scope limitation where you can't get the evidence you need. And then finally, we have the potential for an adverse opinion, and that happens when you do get evidential matter, but you simply don't agree with the financial statements as they are presented. They have a material misstatement. So that's the 4 different options for your audit opinions. As I conclude this presentation, let me remind you that you'll need to start using the new SAS 134 opinions for your calendar year end December 31, 2021. So make sure you start using those new opinions, especially if you're in a peer review year. Now, if you have one of the modified opinions, you'll need to look those up in the audit standards, and because those are different also. It's not just the unmodified opinion that has changed, but the modified opinions have changed as well. So make sure starting December 31, 2021, that you use the new SAS 134 opinions. I hope you find this presentation helpful, and I wish you well as you do your audits in the days ahead. Bye now.